Welcome to the debate. Today we're looking closely at a complex financial situation involving someone named Ghazala Din, who stepped in to take over payments and refunds for, well, what seems like a struggling investment scheme.
And the real question we're grappling with is this. When someone takes sole responsibility like that, is it ethically sound or even practical to start changing the rules? To maybe not pay back certain people based on pre-existing agreements just to try and keep the whole thing afloat?
Exactly. I'll be arguing that Ms. Din's approach, her willingness to take full ownership and make some, yes, arguably controversial adjustments, actually represents the most pragmatic path to clearing these debts for everyone.
And I'll argue that this approach, well, it fundamentally undermines the trust that's essential in any financial commitment. It seems to ignore the fact that original agreements, they should be binding.
Look, Ghazala Din makes a pretty strong statement. This is solely my responsibility now. That's taking ownership. And she backs it up with a concrete timeline clearing the monthly up-to-date payments by mid-next week, which sounds like October 6th or 7th, 2021. Now, her suggestion, yeah, it's tough to maybe not give money right now to people who've already made them money back till April. I see that as necessary triage. It's a pragmatic move in a crisis to manage liquidity, make sure other urgent payments can be met, and crucially, secure the stock.
How does one that hard to accept? The person she was speaking to rightly pushed back, didn't they? Saying, I don't work like that. People don't invest just to make money back. I mean, a debt is a debt, right? And what's more worrying is the background here. The material shows that commitments were already shaky. Refunds that were promised apparently at the end of 1 month got pushed back 2 whole months. That creates enormous stress, understandably leading people to set this hard deadline of tomorrow. So taking responsibility, in my view, has to mean honoring the original deal, not making up new rules unilaterally.
Past delays, I do. But the scope of her responsibility as she states it seems very much forward-looking. She's taking on the headache, as she puts it, specifically to stop that pattern of failure, presumably to protect the other party involved too. Her priority seems to be making the structure viable so that eventually everyone can be paid. It's about preserving the core operation.
But that preservation attempt, it comes at the cost of the agreement itself. How can anyone trust this new plan when the immediate history is one of, let's be frank, broken promises? Pushing back refunds by 2 months, that's significant. Responsibility has to include acknowledging and dealing with the consequences of those past failures, not just shifting the burden again onto people who've clearly been waiting under stress for however long. That tomorrow deadline isn't just a date, it's a measure of how thin the trust has worn.
Right, and that financial pressure is exactly why the idea of protecting the stock is so central here. When she says, what's there is their stock, she's talking about protecting the underlying capital, the assets. If the limited available cash just flows out immediately to people who've, yes, already recouped their initial investment plus some return, the ones who made the money back, you risk a complete collapse, and then nobody gets paid, especially not those who haven't seen a penny. From a financial management standpoint in a crisis, you have to prioritize.
But that prioritization ignores the contract. You're essentially saying that hitting some arbitrary break-even point suddenly makes an investor's claim less valid or, postponable indefinitely. That fundamentally confuses cash flow management with contractual obligation. The interlocutor was very clear on this point. They never said to anybody that we're going to keep that money. That implies a promise, an obligation for a full return as agreed. Protecting the stock can't mean defaulting on existing explicit debts.
It's not defaulting, it's sequencing. Securing the underlying assets, the stock, is what makes future payments possible. It's about preventing total insolvency right now to protect the ability to pay everyone down the line. It's a strategic delay for some, perhaps, to ensure the survival of the whole system.
Well, wrapping up my view, while the intent to take responsibility is stated, the proposed method, withholding payments based on past returns, especially given the backdrop of already significant delays, creates a serious integrity problem. It risks shattering whatever trust remains. honoring the original financial commitments, however difficult, seems the only way to potentially stabilize the situation for those people anxiously waiting for tomorrow.
And from my perspective, Ghazala Din has stepped into a volatile situation, offered a clear timeline for at least some payments mid-next week, and proposed a strategy, tough as it is, aimed at overall solvency, prioritizing payments, securing the core assets. This is about navigating a crisis to hopefully clear the situation for everyone involved in the long run, even if it means difficult choices now.